Well, welcome everyone to today's class on price action trading, today's webinar on price action trading. It's Chris Capre of SecondSkySports.com and FX Street who is hosting this. Thanks to them. Just to give you a heads up ahead of time, on I think it's June 7th, so that week I'm going to be doing two webinars that week, the normal one on Tuesday, but I'm also doing one on June 7th that Thursday. And this one is basically you guys get to choose the topic. So this is something that's being promoted through FX Street in conjunction with myself. We decided to, since we get a lot of requests for a lot of different subjects, we thought we'd create one where you guys get to vote. And so what's going to happen is we're going to look at all the votes basically, and then whatever one has, basically we're going to look at all the votes, and then I'm going to pick one from that. I'll probably take the top three that get the most votes or similar votes, and then from there I will pick from them. So, but if you want to register for that, I have the link here for that. So make sure you guys register for that one. So I'll be doing two webinars that week. Yeah, the voting goes up till May 28th. So make sure you not only, okay. So anyway, so in regards to the Facebook webinar, which is what I was talking about last, voting goes up till May 28th. Make sure you click on that link, register for the webinar, and add a comment as to what you like the topic will be. And then we'll see who wins the topic. We'll make the announcement, and then we'll get everything set up. So I'm looking forward to that one. That should be a lot of fun. There's been some interesting topics that have been proposed already, so that should be a lot of fun, you know, especially with the ones that are out there, some very interesting topics. So I'm looking forward to it, so don't forget to vote on that. All right, so today's webinar is on price action trading. As many of you know, I like to spend the first 5-10 minutes talking about some aspects of trading that you all are going to encounter, some all that you will probably have experienced or will experience or are going to experience or that are just part of the trading process. And again, as I've said this, hundreds and hundreds of times, usually the greatest obstacle to you becoming a successful trader is between your two ears. And so it's not your system, it's not the market, it's not your broker, it's not any of those. Generally, what separates you from profitability and failure, or not making money and making money, or just being break even, or being totally successful in profitability, is between your two ears, and it usually has to do with the mental game. And so that's why I spend a little bit of time talking about this in the first few minutes, and then from there, I'm going to be getting into Aussie dollar. I've been very active on the Aussie and Kiwi dollar the last few weeks. And I'm looking to set up a new position on the Aussie dollar very soon. So I'm going to show you how some of my course traders have been trading it. I'm going to show you how I've been trading it. I've been showing how you can take advantage of these trends, particularly here, and what you want to do in situations like this, and how I've been trading it on a 1-hour time frame. But before that, I just want to get into some brief aspects of trading. So I had a tough time deciding. I almost kind of want to talk about two things. I spent the entire weekend talking with, I was with a derivatives trader friend of mine. He trades oil, gas, and chemicals, which is interesting, and that's because he actually works for a giant global national chemical company. And so with that being said, we got to spend, this weekend. He came to my place. I have a guest house for him, so, he just stayed at my guest house. And we spent the weekend. We got to go to the casino. We got to, go to the restaurant and do some nice things. But we're talking a lot about the market. And, he's been trading since '96. I've been trading since 2001. And so, we've been doing this a long time. And so we've been kind of talking about what's been going on in the markets. But, the markets have changed drastically since, we started in the business. I mean, back when I was, trading, the dollar CAD was around 140, 150. Some of you have never even seen those prices. And you may never see those prices again. Dollar Swiss, was in 120s, 130s, sometimes 140s. And, even then, the thought of selling the dollar Swiss to be a carry trade was unthinkable back in my early days. In fact, me and my trader friends were even joking about it, like, oh my gosh, we're going to have to sell dollar Swiss to get the carry. It was such a unique change. There's been a lot of changes in the market, and a lot of them have happened really since 2008, since everything just kind of went berserk and everything fell apart. And then you also bring in these high-frequency trading algorithms, and things have changed. But the one thing that we've talked about that hasn't really changed is two things, is that the bottom line is to be a successful trader, you have to put in the work. You have to put in the work, and, it's just like anything. Mozart, Beethoven, they all put in the work. Michael Jordan, he put in the work. Anybody who has been highly successful at what they're doing, they have to put in the work. There is no cutting corners. There is no shortcuts. You have to put in the work. He's put in his hours. He's probably put in 40,000 hours behind the charts. I put in well over 20, 30,000 hours behind the charts. And, we didn't do this by cutting corners. We did this by sitting our asses down in the chair for hours on end, studying charts, studying the markets, studying patterns, but then also facing ourselves and understanding that we are a big part of the problem, not realizing that it's not the markets, it's not our broker, it's not the execution, it's not any of that. The biggest distinction, is that you have to put in the work, and it's all really upon us at this point. It's not that one of us is more intelligent than the other, and that's the reason why one's a better trader. He didn't have any experience in economics at all. I didn't have any experience in economics at all prior to this. It doesn't matter what degree you have. Anybody can be profitable, because the bottom line is the mind has neuroplasticity to it. That means you can develop skill sets and learn things regardless of your age. That thing about, hey, it's much harder to learn a language when you get older, it's not true. I picked up a second language in a very short period of time. And so it's just not true. There are some differences, but you can almost get to the same level of fluency as if you started when you were 5. That's the real thing about it. So you can learn how to do this. Whether you're there or not, wherever you are at in this process, if you have the motivation and you have the passion and you have the will to do it, you can become a successful trader, but you're going to have to do the work. Along those lines, I was doing some, I think it was Sunday. He went home. I drove him to the airport, and that was it. And I was spending some time, just kind of looking on the internet, doing some things. And, every now and then I look up for Forex things, and I look to study things, and I look to read things, see if there's any new books, see what's going on. Just because, this is what I do. This is my life. This is what I do day in, day out. And I found this forum, and it had talked about price action. And what was interesting was when I started to get deeper into the forum, I realized something else was actually going on in this forum. And what was going on was that the head of the forum, he would buy systems, he would buy robots and EAs, and he would buy books and things like that. And then what he would do is he would sell them to the members. Some of the materials he'd give free access to, and some of them he would sell them to the members. And many of you who know me know my position on these things, I'm very big into the mindset and the laws of abundance, and I'm definitely big into not stealing things like this. And, here I was just a little bit ago, the day before, sitting with a very successful derivatives trader in chemicals and oil and gas, myself a professional Forex trader. I have a fund. I've had, now a 9-year audited track record. So here we are. We all did the work. And here's somebody who's completely disrespecting our business and our industry. They're disrespecting the market as a whole. What are they doing? They are stealing things and then giving them away to people for free, or they're trying to make money off of them. And so it's, it kind of irked me, but I had a long think about it. And here's the interesting thing about it, which was this guy had hundreds of systems and ebooks on his forum. I mean, just hundreds of these things, hundreds and hundreds and hundreds. And if I had to guess, I would be willing to bet 25 to 50% of you have gone to these forums, and I would be willing to bet of those of you that have gone, at least 25 to 50% of you have downloaded these things for free. Here's where I realized when I was looking through the forum, the way these people were talking, the way these people were relating to money, none of them you could tell were successful traders. they were all saying, hey, we have to chip in for this thing that he just bought. It's going to cost us $50. Man, that's way too much money. And then their product is $250. Wow, I would never pay $250 for that. Here they are saying, I want to be a professional Forex trader. I want to trade big money. And then they're saying, oh yeah, $250 is too much for me to pay for something, whether it has value or not. It's a complete contradiction in terms. It's a complete contradiction in mindset. So they don't even realize that the problem is between their two ears. They're saying, A, I want to be a professional Forex trader and trade big money, but at the same time their mind and subconscious is saying, B, well, $250 is just too much money to pay for something like this. I would never do that. It's a complete contradiction in mindset. And those two things will always be inside the dome there, working themselves out, trying to wrestle out who gains control of the moment. Sometimes the one that wants to be a successful trader will, sometimes the person that, or the mindset, hey, I don't want to pay $250 will, and that's the one that will cause losses. And so this person doesn't even realize they have the complete wrong mindset to do this. On top of it, they also have the mindset, if I just have more systems and more systems and more systems and download more and more EAs and more ebooks and this and this and that they're going to become a successful trader. That's not how it works. You don't become successful by piling up the systems like books, like a professor piles up books in their office. That's not how it works. You master a couple of them, and then if you really developed in that and stabilized in that, then you can go on. When you learn to play a musical instrument, you don't learn the entire orchestra. You learn one instrument. And then after you've mastered that, then you work on mastering others. You don't learn to play 5, 6, 7, 8, 10 at a time. And it's the same thing with trading. You learn how to get one or two systems that, based on who you are as a person, match up best with your personality, your aptitudes, your skill set, your desires for trading. And then you master that as much as possible. You learn that thing inside and out, and you really understand that. And then after you've been doing that for 1, 2, 3, 4, 5 years, and you have 1, 2, 3, 4, 5 years of a consistent track record, then you start going on to mastering others. I only worked on a couple in my very beginning, and only until I was able to get those down to a certain level did I really start expanding my skill set on that, because I was able to. When you're an architect, you don't learn to build every type of building possible. You specialize in certain types of designs, and that's it. And then after you've done that for a while, then you may expand yourself out. So these people have the wrong mindset that, oh, well, this is too much money to spend on this. I'm not going to pay for that, so I'm just going to, I'm going to do this, or I'm going to steal it, which is another completely opposite mindset than what you need to be a successful trader. The second problem that they had is that they believed that piling on systems was the way to become profitable. I completely disagree. I saw somebody on the forum who I actually respect as a trader saying, well, you need at least 13 different systems in your toolbox. That's absolute bullshit. I have a student named Tony. He traded one system the entire year in 2011. One. I wrote an article about it called Ode to the 4-Hour Charts. I put his entire track record for the year on there. He traded one system, one time frame, and he did 110% last year. He was about 60% accurate. His biggest win was well over 1.5 times his largest loss. Everything was balanced out across the board. He has a total professional track record, and in 1 to 2 more years, if he keeps repeating that, he can get any job for any fund he pretty much wants. Maybe not the gigantic ones, maybe not the macro funds, but the bottom line is he mastered one system, and that's why he's successful. So you don't need hundreds of systems to do it. You just pick your one, learn when to use it most, learn when not to use it, and that's how you leverage the strengths and the edge of that system. So that's the second part of this, where they have the completely wrong mindset. And the last part is that they were stealing in a way that they weren't wanting to do the work. They were stealing thinking, well, all I need is just these things, and then I'll be successful. Yet none of them would really be willing to fork out $250 for the product. If they were highly successful traders, or they were pretty wealthy, they would just put the money on and be like, yeah, of course I'll pay the $250 for this. No problem. No big deal. Why? Because $250 is not that big a deal. Obviously, it was a big deal for a lot of them, which tells me none of them are successful traders. Not one. And the guy who owns the website, there's, I really had a long think about this, and it's either one of two scenarios with this guy. He's either A, a complete, he has absolutely no conscience whatsoever because he's done this hundreds of times. This is scenario one. He's either A, somebody who has no conscience, and if that's the case, then there's nothing anybody can do for him. He's just going to be someone who does these really awful activities, and this karma will eventually build up, and it'll eventually come back to him in one way or another. Generally, they tend to come back in 3, 5, 10 times more worse than the thing that you've done. So either he has no conscience, and there's nothing that can do about it, or scenario B is he's somebody who's just trying to make money. He's just trying to make money, but he hasn't figured out how to do it through trading, and so he's trying to do it through a form and selling things and stealing things. The bottom line is that by stealing all these things, you're going to isolate yourself. Nobody's going to really want to work with you. And the people that will want to work with you is not the clientele that you're going to want to be working with. These are all people who all have a similar mindset. They're all going to be eventually wanting to steal from you. They don't really care about themselves or anybody else. They care about them. So with that being the case, the bottom line is that the whole forum has the wrong mentality. The person who runs the forum, all these individual traders, none of them are willing to do the work. And as long as that's the case, none of them will be successful. You have to do the work. And that means sitting down on your ass, and that means filling out your trade journal, and that means studying the patterns, and that means sticking to your trading plan and sticking to your money management plan. And even though the market's moving, even though you're getting that twitch to want to get in the market, your system's not saying go, so you don't get in early. Or there's no trade and you have the discipline to walk away. Or it's time to make the trade, you got all the setups, and you pull the trigger. And that has to happen thousands of times. You have to do the work day in, day out. Everybody who is not successful seems to think that from here to there, from the point where you are now to becoming successful, is the hardest part. That's absolutely not true. It's actually harder once you get here because the levels keep getting higher and higher, and the energy keeps going up a level and up a level and up a level. It's like racing a car. You start racing at higher levels, you have to be more disciplined and more precise because any little mistake has that much more consequences. If I'm racing little go-karts and I get an accident, chances are I'm probably not going to be messed up that bad. But if I'm racing a Formula One car and I get in an accident, it's a whole different game. My life's on the line. And that's how trading it is. The hardest part is not getting here. The hardest part is maintaining it. And the only way you can do that is doing the work from here to there. Does that all make sense? Sorry I went on a little rant there, but, I'm really passionate about these things. And I was really, for a while, I was really frustrated that somebody would engage in something like this. But then I realized either he's a douchebag or, and excuse my language there, but he is. Either he's that or he's someone who's trying to make money and he hasn't figured it out for himself how to do it with trading. Because if he was, he wouldn't be doing things like that. My derivatives friend trader isn't doing something like that. I know a bunch of successful traders are not doing things like that. So with that being said, obviously he hasn't made it because if he was, he wouldn't be doing this. And so it's either A, no conscience, or B, he's just trying to figure out a way to take care of himself, make some money, pay his bills, and he just hasn't figured out a way to do it consciously. And so he's doing it unconsciously in a very karmic way towards others. So it's either one of the two. I'll confess, in earlier points of my younger life, I did some things that weren't exactly kind or conscious to others and were very selfish. So I can't judge him on that per se because I don't have all the evidence what he really is. But all I know is the path that he's going down and his entire forum's going down, I'll be shocked if less than 5% of them ever become profitable. I would be shocked because they completely have the wrong attitude about it. All right. See, a couple questions. Blakey says there's a lot between our ears. What did you refer to? I think Gabriel answered it for me. Where are we at? Yes, and thank you for answering that, Gabriel. I appreciate that. Forum site name, I'm not going to give it. Why would you even want to go to that forum? Why would you even want to know it? It's a completely toxic environment. So I'm not gonna put that name on there. This is being recorded. You know, if I put this out on this webinar and put that name out there, then it's just going to give him attraction and support and more members. And that's the last thing I want to do was support anything like that. I will never support things like that. James says, did you leave a message for them on the forum? No, I will be communicating with them very directly pretty soon. I'm preparing a message basically for them. So Dave, and last question here. Dave says, Chris, what's your opinion about market profile trading? Is it widely used in professional FX circles? This is a great question. I wouldn't say widely used. It's probably, it's used decently, but it's definitely not as common. And part of the reason for that is it kind of requires you to approach trading through a different mindset. You have to learn how to read charts a little bit differently. And you have to look at the market a little bit differently. And the people who are going to do that are people who are just attracted to it and see the use of it. You got to remember, there's no one method that is the method. There is no one perspective, or there is no one style or time frame that is the method. And so, yes, some of them are using it, but some are not. Some charting packages don't even really offer the way to do, market profile. So with that being said, is it widely used? A lot of my friends are not using it. In fact, I would probably say a small percentage of them are using it, less than 10%. That's from what I've seen out there. All right, Chica says, can you briefly explain your shadow system and what it is about? Thanks. You know what, all right, Chica, it'd be probably better if I answer that in an email, because this is about price action trading, and the shadow system is about, it's not about, this topic here. So email me, and I'll be happy to send you some information about it. Wiki says this guy's initials DB. No, it's not. Okay, Didar says, is it possible to trade only with price action using no technical indicators or fundamental indicators? Yes, absolutely. In fact, I'm going to use that as a SKU as to how I was trading. Some of my price action course traders were trading the Aussie dollar in this trend. And so I want to talk about how I traded using pure price action and how I was. The last 2 weeks and a half, or about 2 weeks, I've been highly active, and I've been very isolated to trading mostly Aussie and Kiwi dollar. Those are the two I've been most active on. I still have some long-term shorts on the S&P and the Dow. As you know, I was very bearish on those, so I'm short way up there on the Dow and the S&P. And I'm going to hold those for a while because I think the thing's going into oblivion. So, but let me show you. Let's dig you into this. So, Aussie, Kiwi, just look at this real briefly. Aussie was in a brief consolidation period for a month, pretty tight range. Many pairs are like this. We're talking 230 pip range. Kiwi was in a worse consolidation. Much deeper consolidation here, very tight. And I've seen these before, I don't mean on small time frames. I've seen these on larger time frames. On small time frames, they have a certain effect, they have an effect of a certain magnitude, but when they happen on daily time frames, they have a very large effect with, quite a strong magnitude. Is that the bottom line is prices don't like to stay bottled up, contained this long. It's not good for dealers as a whole. Dealers like to see movement, because if they movement, there's more transactions, which is where they make their money on the spread. So, as a whole, it's not good for dealers. It's not good for brokers. It's not good for traders either as a whole. Some traders will benefit in this area, but most traders will not. Most will not benefit in this. And so with that being said, especially the larger funds, it's very hard for them to be nimble inside this little tight range here. So, traders generally like trends as a whole. Beginning traders tend not to like them because they tend to get in them too late, and then they reverse, and then they say, okay, I don't like trading trends. Well, the problem is not the trend. The problem is how you were trading it. So when you learn how to trade trends, that's where you're going to make a lot more of your money, is when the market is highly directional to the north or the south side. That's where you're going to make most of your money. And so with that being said, when you see these bottlenecks like this where the market is highly consolidated, I've seen these time and time again. On the daily chart, they usually lead to explosive moves. Kiwi dollar was one of them. Aussie dollar and Euro dollar was one of them. Euro dollar was stuck in a 400 pip range very unnatural for something that was so, had so many issues around it. This one went from 33 to 26. A really good example of this was, I remember back in my days at FXCM was EuroCAD. There was two of them in my day that I remember very, very clearly that I was very active in. Was EuroCAD had a very explosive move after a very tight consolidation, and you'll recognize the pattern almost looks identical to the Kiwi dollar. Very tight consolidation, breakout retest setup, and then it's gone for roughly 1,000 pips with almost no stopping. Same one around that same time frame was Pound Swiss. Pound Swiss consolidated in a coil type fashion. And, that is just like massive accumulation. Let me show you where that one was. Oh, Pound Swiss has really deteriorated over the years. Okay, so it was, should have been, man, I'm getting old. It's been this long. Okay, here it was. Pound Swiss, for such a volatile pair to be stuck in such a tight range, wide range, then it gets in a tighter range here. I was actually a buyer back at 225 on this one here, and then this thing just goes from 230 up to 245 in a screamer. So when you see these types of really tight consolidations, they tend to lead to very strong breakouts. So if you're trading with trend, then, when you see these, if you're a with trend trader, when you see these very tight ranges, just sit aside because the general outcome of this is generally going to be a very large breakout and move. When things are consolidated that long, they tend to lead to very strong breakouts. So you just sit on the side, wait until the market actually breaks out of the range, and then you start your with trend trading systems, and that's it. So with that being said, let's talk about some ways you can trade this using pure price action. All right. Some of my traders, I had one guy in the last 2 weeks, he went 7 for 7. 7 for 7 last week. He had an excellent week. He was selling here. He sold here. On the close of this candle, he sold here, and he sold here. He caught 4 of these. He caught 3 on the euro, went 7 for 7, and he just crushed it. He absolutely crushed it. I wasn't trading on the daily time frames. I was actually watching the 4-hour, looking for my cues on the 1-hour. And let me show you what I was seeing on the 4-hour. Okay, so here the market's starting its move. And for those of you that I've talked about, if you miss a trend, the most common thing for traders to do when they miss the initial point of the trend is to trade on breaks. And that's fine. There's nothing wrong with trading on breaks as long as you do it intelligently. But you got to also understand, trends do not go in straight lines. They inhale, they exhale, they have to pull back. And one of the most common places that they will pull back is to the 20 EMA. And that's generally because institutional traders, they know that the market isn't going to go in a straight line. They know that this just doesn't happen that often. So what do? They look for ways to get it on the pullback. Why? Because they can get it on the cheap. If you were shorting way back here, would you be trading breakouts at this point? No, you already caught the trend. You're already making money in it. You're going to wait for pullbacks to either add on your position or start a whole new position for that matter. And you understand that the market will pull back. So people who are chasing the trend, who have missed out in it, they see this thing's falling and they're saying, oh my gosh, I got to get in this here. They generally don't, the mistake is they don't look for pullbacks. They look for trading on breaks. And that's fine. You can do it if you do it intelligently. But if you're not, then wait for the pullbacks. Even though in the daily time frame it looks like it went in a straight line, the bottom line is on a lower time frame, on a 4-hour, 1-hour, you will get those pullbacks. Even if you miss the breakouts, don't worry, you're going to get another chance to get into it. So there's some great setups on this one here. Nice little pullback here, pullback to the 20 MA here, nice little pin bar rejection off of it. This is some great setups right here, all rejections off the 20 MA, which acts as dynamic resistance all the way down, offering you chances to get back in the market. I mean, I don't know how many opportunities you need here. 1, 2, 3, all at the same level. All at the same level and all at a roll reversal level. The market finds a floor, Once it breaks out of it, treats it as resistance, pulls down, makes a swing low, again, treats it as resistance, giving you tons of opportunities to get into these trends. So I watched it on the 4 hour and then I said, okay, I'm looking for my opportunities on the 1 hour because this is just incredibly consistent here. So let me show you a few of the trades that I was looking and why I recently just reversed it. I did 2 little reversals on it. And so let's talk about this here. Now, one thing to note is that when the market is in a strong trend and it makes a strong move in that trend, when the market starts to find a pretty solid bottom, you want to mark that level because it either represents that there are a fair amount of buyers there that are trying to stop this trend, or maybe there's some strong profit taking in there because maybe the sellers sense they can see some of the orders that are there and they're saying, okay, let's take a profit ahead of some of those orders. It doesn't really matter why. When the market forms a very strong bottom after a very strong trending move, mark that level. So just mark it and say, okay, hold on a second here. There we go. When you see that, we see a nice little strong bottom here, even a pin bar rejection here. We see that, we mark that level. Why? Because when the market does break it, you want to look for a with trend setup on a breakout retest. Now, there are going to be times where the breakout of that level will come back in a very short period of time. And that can often provide a good setup. But if you miss that, that's okay. Because oftentimes the market will give you another. Wait for a better entry. Don't worry about missing a trade. There's going to be another that's going to come down the line. If the trend is really strong, there'll be plenty of breakout retests. So I was looking for a breakout here. Actually, one of my traders, an aggressive trader, took this little buy here, did very nice. For me, it's a little aggressive, but it was a nice pin bar, acted as a trap. Obviously, there were some sellers selling on the break. If there wasn't sellers on the break, we would have never printed here. So there were some sellers on the break, but they got trapped. Basic pullback right here to the same level and did a nice little play. Me, when I see strong trends, I'm just looking for with trend setups. You know, on the daily chart, this thing was selling off 13 out of 14 candles. Why would I be looking to trade counter trend in the face of all that? I'm going to keep trading with trend until I see plenty of buildup showing counter trend trades are setting up at this point. And I'll talk about what I was seeing in that. But very simple. I didn't catch this breakout, but I knew I'm going to get my chance. And so after I see a nice little swing low with a nice little pin bar trigger, I say, okay, I'm going to wait for a little pullback to the level, and there you go, you get it. There's 2 ways you can trade these little breakout retests. You can either take the level, which is one option, and sometimes that's a totally acceptable level. I prefer to take the level if it happens pretty quickly. In other words, it breaks out and it comes back quickly. But if it's been a while, I don't know if the market is going to be respecting that in the same way. So I'd rather wait for a trigger off that level, a price action trigger, pin bar, outside bar, engulfing bar, piercing pattern, something that is communicating to me the live price action is respecting off of it and there are new sellers willing to enter off that level. This is one good trigger. Here's another one, nice little piercing pattern, or in this case, dark cloud cover. So here's another little option there. Very, very simple, but plenty of opportunities to get in on this level here. If you miss that one, no big deal. It gave you another one, and it gives you now an engulfing pattern, and then it even gives you one more pin bar rejection off the same level. So very simple. Look for these breakout retests. I took one of these here, and then I waited for the market to break down here. Very simple trade. I think I caught about 42, maybe 43 pips on this one here. But I will note, hey, we're forming a decent bottom here. Well, the trend is relatively stable, and notice how the bottoms are stable. With the bottoms stable like that, even though this one is a little bit lower here, when you have stable bottoms and stable tops in a trending environment, what does that usually mean? Alex M says trend reversal. Dave says consolidation. Fernando says impending reversal. Range bound with view to breakout. Liquidation, ranging, sideways. No. Okay, let's see. The closest one, and that's because he's in my course, Al, range bound with view to a breakout. That would probably be the closest. If you have a trend and at the bottom of that trend, the market is forming a stable range, that consolidation, the fact that it's stable communicates to me there's a likely trend continuation. Why is that? Well, it's very simple. In a trend, trends only happen because of an imbalance. Okay? So in this case, the sellers and the sell orders are much more dominant than the buy orders. So there's an imbalance between the buyers and the sellers in this case. Only until I see a massive counter imbalance to the upside will things really communicate to me, or a building of that, will things start to communicate to me that, okay, this is likely going to reverse. What am I seeing here? I'm seeing stability on the top side and the bottom side. So that means there's a balance between the buyers and sellers. Yes, this does mean range bound, but what it eventually means is trend continuation, because the buyers are not coming in with any sort of force that's being outdone, or that the sellers are coming with a certain force, but the buyers are not outdoing them. They're just playing ping and pong with each other, and the things going back and forth. That's just a redistribution. It's a repositioning. And the bottom line is that since the sellers were in control leading up to this, there's a very high probability that the market will continue pushing on because they were the last to have control, and so they're going to try and keep maintaining control. The buyers, if they wanted to make a stronger statement, would make continually higher lows and higher highs. But they weren't making that. They're making stable highs while the sellers are printing stable lows. So since the sellers were the last ones that have been dominant, and they've been dominant all this time, it means range bound with likely breakout and trend continuation at this point, because we've seen no upset of the balance at this point. Does that make sense? Yes, no? No answers. Slightly stunned. Okay. Consolidations aren't bad for trends. If they're stable, then that generally means trend continuation. It's when it's unstable that I'm looking to say, hey, there's either going to be a direction change, or it could be unstable on the sell side, which means trend continuation. But stability with no new higher highs and no new higher lows tells me trend continuation. So look what happens as the market continues. We know that this is a key level, and we'll mark this one here as kind of being a key level as well. So look what happens. The market breaks it, forms a flag right over there, and then breaks through it. And then what does it do? Prints an SDB and double pin bar right here. So maybe we should be looking for a repeat of this whole breakout retest. And it does it again. Right back to the same level. Gives me another opportunity to get back in the market. I got a trigger, so that I'm going to be shorting it again, because this tells me the trend is still in play, and that's it. I've seen nothing new change. This whole breakout and retest is an exact repeat of this here. I don't see how you could miss these setups. They're just clear as day. What was support becomes resistance. What was support becomes resistance. This is classic role reversal trading here. Now, this is where it starts to get interesting. This is quite an aggressive candle. From an open to close basis and from a high to low basis, it's the largest candle in this entire series and the largest in several days. So what does this mean? It could mean that the sellers got really aggressive at this moment here. So, but here's where it gets interesting. And this is where I started to say, hey, this is kind of peculiar. Look what happens right after that. After a really strong sell candle here, the market then goes sideways for 6 hours at the exact same level. Now, you have to ask yourself, after such strong selling, why was there no follow-through? Why, what happened to all those sellers that were a part of that? Where did they all go? It doesn't make any sense. It doesn't make any sense at all that they just evaporated out of thin air. So to me, that is starting to communicate that they are starting to get absorbed, and that maybe we have a real bottom in place here at this point. The fact that it's getting absorbed higher either means that the buyers here are adding in new orders because they believe they have control now and they're propping this thing up and they're absorbing the offers. It could also mean that new sellers maybe missed that, or new buyers missed this here, and they're saying, shoot, you know what, this thing's stopping right here. We're going to buy it here as well. So they are now propping up the market, or it's both. Either one, it doesn't really matter. The bottom line is this thing is levitating above a prior low, and it's doing it for 6 hours. That's very peculiar. Now it's doing it for 9 hours. And now all of a sudden you're starting to see that the blue candles as a whole are starting to outnumber the red, and they're starting to get bigger. Wasn't quite the case in this one here. What is this? 5 out of 6 blue. 5 out of, same thing here. 5 out of 6 red, 5 out of 6 red. You know, it's pretty obvious that they're in control, but we're not seeing this here. We're starting to see a change of hands by the colors changing from red to blue more often. Now what happens? We see a couple red candles print, and then we see an outside bar print with a higher low. So now we're starting to see higher lows. This is all starting to communicate to me that maybe the buyers are now having control of the market. I consider this to be a double bottom. And let me zoom out a little bit, or let me clear some up here. I consider this to be a double bottom. And I consider this right here to be a double bottom as well. It's called an SDB, shortened double bottom, back-to-back candles. On a smaller time frame, this is just a double bottom that's spread out a little bit further. So I consider this to be a micro double bottom or a shortened double bottom, and then right here, a double bottom of this right here. Now, generally, when you see double bottoms, it is not uncommon to see higher lows printed before the market reverses. That has to do with partially, there's a buildup of accumulation of buy orders. There's still some sellers that are trying to take over the market. Here, you know, they're trying to push it back down. You know, here, they're trying to push it back down. The same thing here as well. But the fact that it keeps printing higher lows is telling us there's new orders coming in, either new players or the same players buying it at a worse price. And if they're buying it at a worse price, they're doing it because they're more confident. The only reason why you'd be willing to take on a worse price and reduce your upside is if you're really confident about this here. So what did I do? Very simple. Waited for my trigger. I got a little pin bar there and a simple buy on open on this one here. Very simple little play. Stop below the lows of this here. Need a minimum 2-to-1 target. Generally like a 2-to-1 target. But I felt, okay, anywhere from, you know, say here to here is where I suspect it'll go. This was kind of a sticky point, so I said, okay, let's just target. It's almost 2-to-1. And as you can see, very strong buying candle in the next one here. Tells me that, wow, one candle took out the last 4 hours of selling. The buyers are really starting to gain control. And then, bam, use the 20-minute support, come to my target, and take it out. Now, I actually made a video yesterday of how I actually did a new trade on this one here. Going back, and let me show you here for a second here. Going back, we can see that there was 2 clear floors here. Once it broke, it respected this one, but this consolidation respected this one. So to me, I looked at this and said, okay, there's clearly a floor in place. So, and there's some very strong buying. 1, 2, 3, 4, 5, 6. 5 out of 6 candles are bull candles. So I took a breakout retest on this one. And the little double inverted pin bars here were suggesting continuation. I had about a 23 pip stop, and I had about a 45 pip target on this one here. My general rule is if I have about a 2-to-1, that when I'm 1-to-1, I generally like to bring the stop to break even on this one. As soon as I've hit 1 times my profit, I'll bring the stop to break even. Unfortunately, I didn't get my full target. It came a little bit back into my entry. It probably shook out a few traders that were trading this flag. A lot of times traders will see this flag and they'll buy at the bottom of the flag, or they'll see the breakout and say, okay, this market's going to break out. And they're saying, hey, now it's time to sell. It's not time to sell. That's actually generally a trap. Usually these little flag breaks like this are false breaks. It's generally a trap. And so what happened after that, it did climb after that, which tells you that the very strong buying after it tells you that it was a trap and there were buyers that were getting in off this level. but this thing only squeezed out a little bit more. I got to my 1 times target, so I brought it to break even, and unfortunately came back and kicked my break even stop out. But notice the overall structure, which is higher low again. And so this thing is trying to build some counter trend play here. Even when you see it on the 4-hour time, you can see the higher lows in a very clean structure, pin bars along the way. Here's that 6 hours or 9 hours of consolidation right over here, and here's pretty much the entry trigger that I took, and then it climbs up after that. But you can see it's trying to build up higher lows, and that's very common when the market is trying to reverse. Will it do it? I don't know. I think it needs to clear probably. I think it's going to need to clear 99.50-ish, which was a key support and resistance level. I think it's going to need to clear that. If it can, then I can see it going to about here as the next level. So right just past parity. But it's not quite there yet. If it gives me the right breakout and the right trigger, I'll look for another long on this one here. But if this starts to fizzle out, then I'll stand aside and wait for a really good pullback and then sell on a rally. Because I'm more USD bullish right now than I am USD bearish. So with that being said, does that all make sense from a price action perspective? Yes, no? Yes? Can everybody see why I did what I did, how I did what I did? There were some very classic patterns in there. Some very classic patterns. Some classic breakout retests. Again, when the market has a very strong trend, in this case a downtrend, look for it to find a very strong floor, because that will often become a breakout retest level. And so that is, that's definitely something you need to be looking for, you need to be paying attention to. Okay, great. Let's get into some questions here. All right. Load of questions. All right, so hopefully that answers your question, Didar, about trading with price action, no technical indicators, no fundamentals whatsoever. Wasn't paying a word of interest to the fundamentals or to what was going on in the market, just trading pure price action. It can be done. It's being done every day, and it will continue to be done. I have tons of traders. I have actually probably a dozen traders in this webinar that are in my course that are doing it day in, day out, week in, week out. So it definitely can be done. Boyke says, how long ago at FXCM? I was at FXCM from 2004 to 2006. So pretty decent chunk of time. But it was, decent chunk of time. So I left at the end, I left in early 2006, very early. And because I got an offer from a hedge fund. I actually originally didn't want to trade for them. I actually liked working for the broker, believe it or not. I had a great job there. They totally took care of me. It was such a environment to stew in the markets. I was getting access to information that I wouldn't be getting access to outside the market. But I kept meeting with them, and then they finally convinced me to come on over. So, but 2004, 2006, and I went to the hedge fund. A-Train says, everyone's still seeing Aussie US dollar. I think so. Didar says, this breakout can be a thrusting. What about it? I'm not sure I understand that question. If you can help me out and redefine that, restate it, that would be appreciated. Boyke says, do you prefer black charts to white charts? I do, because I find they're easier on my eyes. They don't have as much intensity in them. The white charts can look nice. Let me show you. Where is it? This is called my Darth Vader scheme. But that's book white, and to me that's very bright, and I have gigantic monitors. I have two 27s and a 24, and my two main monitors are what are called photo quality. So this looks ultra bright, and so for that I like to use the Darth Vader. I mean, they're photo quality monitors. It's like just ridiculously high resolution, and they got a a super shiny finish to them. So when I go white, they just don't look, they look too bright for me. Dickie B says, Chris, is a double pin bar a stronger sign than as a single pin bar? Well, not always. It depends on how they form. You know, because not all pin bars are going to be the same. You know, it depends on what color it closes. Is it a bull pin bar, a bear pin bar? They could be, you know, both with long tails to the downside, but depending on how they form, depending upon the body, depending upon whether they form a trap or not, depending upon whether they happen at key levels or not, all will determine whether a double pin bar is a stronger sign or not. It could be that there are going to be situations where it will be, and there will be situations where it's not. It just depends on the nature of each pin bar. And because there's so many different types, there's no way for me to say for sure. Generally, they probably will be more supportive of that than they will be a weakening. So it just depends on how it happens. So hopefully answers your question. Majak says, how often do you trade lower time frames, etc., 5 minutes? Not as much lately. You know, I can, but not as much lately because right now, you know, writing a book, managing the fund, you know, I got 3 or 4 international travels planned up in the next 5 months. And so, you know, it's just, you know, there's a lot going on. I meditate for 2+ hours a day. You know, I run this business on top of that. You know, so I'm quite busy. And so for me, I need to be very streamlined with my trading operations. So I've even had to reduce some systems. So I'm trying to trade more just on the 1 hour and 4 hours right now, and then that's it. And I'm trying to limit it to 2 pairs. Every now and then I'll trade euro and sterling, but right now I'm really staying away from euro, partially because anything can come out of the eurozone that will just throw this thing into cahoots. And especially right now, you know, me and my fund manager were talking about this, that, you know, to be very careful right now in trading euro with a record number of shorts in the euro right now. It can only take one, you know, shiny piece of news or one politician giving some crazy statement that is just, you know, political rhetoric and not really going to do anything, but it could be enough for there to be a massive short squeeze in the euro. And so with that being said, with a massive short squeeze like that, this thing could just pop, you know, 100, 200 pips in no time. Your stock could get kicked and that's it. And so we're not trading it anymore. I'm not trading it anymore for right now. Especially with these many shorts piled on, it's very easy to get a short squeeze like that. That can be very violent. And, you know, the Eurozone is just so precarious right now. You know, I'm generally staying away from it right now. It's just not my favorite one to be trading. I'd rather trade the Aussie and Kiwi, which are just so clean. I mean, come on, I showed you the Aussie on the 4 hour, the 1 hour and daily time frame. How many setups were in there? Just tons of setups that are there for the taking, and you have to take them when you get them. So, but when I do trade intraday time frames, I like the 3 and 5 minutes. Those are my favorites. SH says, is your price action book out, Chris? It's not. I'm hoping summer. We'll see. I have to leave sometime in June for South Africa, and then in July for the entire month I'll be in the States. In August, my friend is getting married in Holland. September, I'm going to Puerto Rico and Panama for vacation. So I'm really trying to get it done before I go on vacation because I don't have to think about it when I'm on vacation. In the sense of, I don't want to have to, you know, still be writing at that point. So we'll see. Let's see. Dira says, what's the best time frame for watching price action? Do I have to consider currency correlation? You don't have to. You can trade pairs just as is. I do it all the time. My students do it all the time. My one trader who was just trading the 1 hour, the 4 hour time frame on that article, Ode to the 4 hour charts, he wasn't considering correlation. So you don't have to. The elements of the order flow will show themselves in the price action. When you learn to read price action, you're really learning how to read order flow. If you trade price action just on patterns, without understanding the nature of buying and selling, without understanding the nature of accumulation, exhaustion, you know, without understanding the nature of traps and things like that, then I wouldn't really call yourself a price action trader. You can call yourself a candlestick trader because you're just trading patterns, and that's trading without understanding. When you start to learn to read the order flow and really understand why that's being created, then I would say you're a price action trader. And so, but that's really what you want to be doing. In terms of what is the best time frame, there isn't a best time frame. However, I will say that from my experience of over a decade in the market, watching every single type of trader under the sun, and on top of it, working with thousands of traders, I tend to find that if they're in the developmental process, the best place for them to start is the 1 hour, 4 hour, and daily time frames. So that's where I recommend starting off, because it'll be a little bit easier to read the signals. You're not under as much time pressure. You have a little more time to kind of just relax into it. You don't have to execute, and every pip, it doesn't mean everything. If you miss a pip or two, it's probably not going to mean that much. But if you're a scalper, a pip is, it could be 10% of your entire trade. So, there's a little leeway in those charts. And so that's where I recommend starting off with. Plus it teaches you patience, which is one of the most critical skills. So that's where I recommend starting off with. After that, whatever time frame suits your boat, but it's very important. This is one of the most important things in trading. No matter what the system or time frame or anything, the most important thing you could do is to know yourself and know who you are and what type of person you are in personality and what your mindset is. Once you understand that, then you can really find a system that's best for it. I know one really good price action trader, he admits, he's like, hey, I'm very controlling. I'm a stickler for all the details. He likes to look at every little detail. And he's such a control freak. So for him, smaller time frames are better because it's very, because of that controlling type nature, to allow things to have a little bit of play, and maybe they don't play out so fast or the way they want to. For him it would just be absolutely nerve-wracking. It's not that he couldn't learn to do it. I mean, I taught a guy with ADHD to trade the 4 hour and daily time frames. And before he met me, he could not even go anything higher than the 1 hour. The 1 hour was almost stressful to him. So if I can teach somebody with ADHD to trade the 4 hour and daily time frames, anybody can do it. But it's important to know yourself and who you are and what works best for you. And then once you do that, then you'll know, hey, I don't want to be trading this time frame or this time frame or these types of systems. I just want to be trading this. Very important. So absolutely critical. Hopefully that helps. Spin Doctor says Euro has, H&S says, would you mind explaining characteristics of accumulation that occur within trends that help determine continuation, state of pullback, for example, small candles better than candles match trend? I actually did an entire webinar where I really talked about this, and it's on FX Street, and I'll show you. Here's the link to it. So I spent a lot of time talking about this. So definitely check out this webinar here, where I spent a lot of time with that. Check out that webinar, and then if you still have questions, A-Train, come back the next time, and we'll talk about it a little bit further. Spin Doctor says Euro has a high emotional content. Exactly. And that's another thing, too, because there is so much emotion. There's so much political posturing about it. And you got to remember, politicians got to get reelected. So they're going to say whatever they want. One moment they'll be like, okay, it's time for Greece to leave the Eurozone. The next day they'll be like, their political, or their PR manager will be like, well, what they were saying is this and this and this, and then that throws off the euro, and it's just such a messy environment to be in. I don't want to, I don't like to be involved in that. I'd rather just trade Aussie and Q, which are just so clean right now, and they're a lot less subject to those emotional rants, political posturing, or anything like that. Plus, there isn't a record number of positions on them, so there's a much lesser chance of a massive short squeeze happening. Connie says, so which two are your faves? I'm not sure what you mean by my faves. Which two are you referring to? So help me out there. Lokesh says, hi, Chris. Do you use Fibonacci retracements and extension along with price action triggers? Not really, because I can generally spot the levels that the market is going to go to. So generally not as a whole. I think also the knowledge, the general knowledge that Fibonacci's are being used out there is pretty limited. It's kind of like using the way Fibonacci's are being used right now as a whole is more like using an airplane as a shopping cart to do your groceries. It's very inefficient. It will work, but it's inefficient. I think if you really want to understand how to use Fibonacci's on the level they were intended, there's a really good book on it by Bloomberg Press. I forget her name, but keep in mind it's highly mathematical. And so I think that was the way Fibonacci was intended to be used. So for me, not really. I don't really need to. Trying Trader says, Chris, can you talk us through the sequence of price action pivot highs and lows for a trend reversal? Can you talk us through the sequence of price action pivot points and highs and lows for a trend reversal? I don't have much time left in this webinar to do that, so maybe we can save that for another one. Vote for that topic on the Facebook webinar, the surprise webinar, and then if it gets enough votes, then we'll do it. So let's do that. Jacques says, I also try to meditate now for about 2 months. I find it very hard to have a clear mind for more than 10 minutes. So do you do 2 hours of meditation in how many sessions? I do 2 hours of meditation in one session. And then if I have a little extra time and I'm not working, till 10, 30, 11 at night, I try and do maybe another 30, 45 minute session before I go to bed. But I didn't do it in multiple sessions. I do 2 hours in one session. I sit down and then I don't get up for about 2 hours later, sometimes even longer. But, Jacques, learning to meditate is actually very much learning like trade. It's a muscle. You have to exercise. It takes time. If you can learn how to meditate, if you can really learn how to meditate, then you can learn how to trade professionally and successfully. No doubt about it. Because there is nothing more difficult. There is nothing more difficult than trying to learn how to meditate successfully. It is far more difficult than trading. Trading is easy compared to some of the meditation practices I've had to go through and the tests I've gone through in meditation. It's far more difficult, hands down. Even though you're just sitting there, once you really start to understand meditation, it is 10 times harder than trading. In my tradition, in my Buddhist tradition, when you get to the, stronger levels of meditation, they have this thing called the four Naljors in the Dzogchen tradition, which is basically the first Naljor. You can't even pass the first Naljor until you can sit for, I think it is, an entire hour without having one conceptual thought. Not one. Not even a flicker. Not even a part of you that even starts the thought. You can't even have that one flicker of that. You do not even pass to the second Naljor until you can do that. And that takes some people an entire lifetime to do. So absolutely without a doubt. But meditation can be learned. People have been doing it for thousands of years. Same with trading. So hopefully I answered your question. Fernando says, doesn't it make sense for you to prefer trading dailies? This frees considerable amounts of time. Yes and no, because in some sense it does, and in some sense it doesn't. A lot of the daily chart trades sometimes take days to, especially in this environment, they can take days to manifest, and that means my capital is held up for a longer period of time. And so, for example, during that range period, I wasn't getting any signals. Well, I'm a trader. I make my money off of trading. I got to be trading to some degree. And so, with that being the case, if I was just trading dailies, I would have been out of the market for a long period of time based on my systems. And then I would have made a fair amount of money in this trend. But the bottom line is there were smaller trends that I could take advantage of. And so dailies take up a lot of my capital, especially if they hold out for a long period of time. I have one competitor who gave a signal. The signal actually didn't hit its profit target until 5 days later. I can find tons of opportunities on the 1 hour and 4 hour time frames, and I'm in and out and I'm done, and they require very little time on my part. But the other thing about it is that I'm really just trying to concentrate on 2 time frames for right now as much as possible, because the more time frames I'm looking at, the more trade opportunities I'm going to spot. And so I really need to streamline all my operations. managing the fund, the trade. I mean, I'm even having my managing director take over many of the operations for the fund just because I can't even do it. I can't even, it's to the point where I don't even have time to sign and fill out, faxes and paperwork and documents and things like that. So it's just much easier if I'm very streamlined. And so hopefully answers your question. DKB says, we're in Holland, Amsterdam. Bartol says, perhaps next webinar you could discuss traps in greater depth. Vote for it. Vote for that, Bartolo. It's a great idea. That's the whole point of this surprise webinar, is that you can vote for it, and then we can get all these ideas out there, and then whichever one wins. So that would be my recommendation of it. But definitely a possibility. Connie as well, go to the Facebook page. Again, if you need to see it, I got it right here. Go to the Facebook page, vote for it, add a comment, and make sure to register. So there's already 2 votes for that. If you guys comment on it, you would be, tied for first place. There you go. Anna says, in South Africa, where Sir want to meet you? It's going to be Cape Town and Joburg, probably. So that's where all the financial, that's where the financial districts are. That's where the money is. So I'm meeting with some banks. So once I know the final details, get in touch with me via email. I'd be happy to meet you. I absolutely enjoy meeting traders and students. I take time out for you guys, not just on the webinars, not just on my course forum, not just on emails. I'm happy to meet traders whenever I'm in their town. No problem at all. I'm happy to meet people. So, Harry Q says, do you use Elliott wave analysis? No, absolutely not. Boyke says, do you do transcendental meditation? No, but I actually trained with them way back in, God, I'm old. 95, 96. I did an internship at one of their institutes. All right, James says, how do they know what you're thinking, Chris? I don't know what you mean by that. You have to give me a better question there. Okay. I think that's pretty much it. So we seem to be done with the questions at this point. Anybody have any last questions whatsoever? Yes, no? Last chance. Make it a good one. None whatsoever. I've answered them all. Wow. That's impressive. If I've answered all the questions, then I've done my job. All right, fantastic. Well, thank you guys very much for an awesome session today. This will be recorded, and the recording should be up in less than 24 hours. And so with that being the case, make sure that you come back and watch the recording again and again and again. And so the link will be on my page, my profile page. So with that being the case, I want to thank you all for coming. If you have any questions about what I do, want to join our price action traders community, check us out, secondscaseforex.com. Until then, I bid you all adieu. Have an awesome week trading, and I'll see you next week. Take care, everyone.